My name is Ben Lang, and I'm here with my friend Eric Gachko with Neo Home Loans. Everyone is asking, is this a buyer's market or is there a buyer's market on the horizon? Now, this week's data shows some surprising shifts, and Eric and I are breaking down exactly what's happening and what it means for you. So, I'm going to start with the mortgage rate update. Rates are hovering around 6.87% per Mortgage News Daily. Over the past 2 to 3 weeks, we've seen minor but noticeable fluctuations with rates bouncing between 6.8 and 6.95. Now, the volatility is not driven by economic fundamentals. It is driven by headlines, tariffs, the debt ceiling, and recession fears. Unfortunately, the bond markets are reacting to news instead of data. And that unpredictability makes buyer psychology more fragile than ever. The buyer hesitation is real. Eric, are you seeing the same thing on the mortgage side?
And unfortunately, it's just not buyers reacting to this news. It's some of the lawmakers. The Fed met on Wednesday and basically said, "Hey, we still think the economy is doing all right, and we're not gonna do anything about it." And that's based on a lot of what we're seeing in the headlines. Now, if you dig into those numbers, if you look at initial jobless claims, it's grown for 4 weeks in a row, so more people are filing for unemployment. We have people that are continuing on unemployment is at a high since basically heading into we really have. If you look at real time data on inflation is at their mark. It's at 2% or below. But again, the Fed is still citing numbers from the Bureau of Labor Statistics that there was a Wall Street article 2 weeks ago that came out, Ben, that where they basically admitted, hey, we're doing a lot of guesswork. We've lost a lot of staff, and we're relying on numbers that are 6 months to a year old and not really this real time data, which is extremely disappointing. And it really, I think, is setting us up to where rates, I don't think are going to slowly trickle down. I think what we're going to see is we're going to come, let's say, fall time, we're going to get into a market where something's going to have to be done really fast. And so I think that sentiment that there is, relief for borrowers on the horizon, I think it's out there. It's the same thing we keep talking about. Rates dip and all of a sudden buyer interest jumps up. And everyone's going out to find a house, and then the next week, a headline hits that something changed with tariffs in China or the debt ceiling or something, and all of a sudden rates go back up and everyone gets cold feet again. It's really frustrating to see buyers out there having not having to react like that, but reacting like that.
Yeah, it's scary. It's really scary when bond market, stock market is reacting to headlines instead of real, true, and tried data. It's a little bit of a scary time right now. Now, I've seen since May 1st, the buyer urgency has noticeably cooled. There's been more showings canceled, and I've seen on my listings, more buyers are saying, we're not quite ready yet. The feedback from the agents, buyers are being cautious. Even when they love the home, there's a hesitation there. I think it's simply because rates are staying high, the inventory spikes, so there's a little bit more homes to look at, and I think most importantly, the fear is keeping people kind of sidelined. And then you couple that with the inventory surge. Metro Detroit residential inventory, this is a staggering statistic. It's year over year. Metro Detroit inventory is up 13%. 13% year over year. That's a huge increase. If we talk about the condo market, condos are up 31% year over year. Just last week, in the last 7 days, we've seen about 1,900 price reductions in our local market. So homes are sitting longer, especially the overpriced ones. Now, that being said, the ones that are priced correctly, They're going to multiple offers still. They're still going to multiple offers. So I don't want it to be like doom and gloom. It just means a different mentality for sellers. We're not in the 2021 market. So we need to stay a little bit ahead of the curve as far as pricing. You always want to price ahead of the market and not be behind the market. That's what I've learned through the last 20 years in this industry. Price ahead of the market. It's very important. And that's why it's important to have a realtor who's constantly looking at, market data and what the market is doing so that you can price ahead of the market. Now, Eric, I really think there's a buyer advantage window here. I mean, more listings equal more choices. And with buyer competition softening, I think lenders, what I'm seeing, lenders are getting creative. They're using the paid subsidies or a 2-1 buy down to get that temporary rate near like a 5.5. And this doesn't solve obviously the 30-year mortgage problem. But right now, I think we're talking more about a 2-year affordability challenge until these rates ease. Is that true? That's what I'm
You know
seeing.
what? I think that's 100% correct. I mean, if you think about what Warren Buffett has said is, his strategy is I buy when everyone else sells and I sell when everyone else buys. And it's just like you say with listings, it's getting out ahead of things. It's seeing what's going to happen before the rest of the market does and reacts. And we've kind of I've been coaching clients on what that looks like for them, even if you weren't to buy into the and use a buy down, which I think is a tremendous tool in this market to be able to solve the affordability problem that we have. But even if you were to buy at the full rate today and you think about it, like with appreciation housing is going through right now, you're going to easily still be ahead of the market, even paying a higher rate here for a year or so. Refinancing, which a lot of people don't even realize, especially first time homebuyers. So when you refinance, that's not money out of pocket. It doesn't cost you money. It just gets rolled into the loan. And the equity you gain over that first year far outweighs the cost that you're rolling in back into the cost of the house with that refinance. And there's a lot of lenders, ourselves included, we don't really charge you, fees and stuff for refinances that are easy. You shouldn't use a lender that is charging you astronomical fees for refinance. And if you are, you probably need to look around a little bit. But it is 100% nail on the head that what people should be doing is really aggressively looking right now. And unfortunately, you're right. It's the fear of the unknown. It's just fear that's keeping people, I think, on the sidelines right now.
Yeah, here's my advice if you're a buyer. If a house is overpriced, but you love it, don't walk away. Write an offer that you think is fair because the worst they can say is no. But I'm going to tell you right now, the ones that have been sitting out there for 30, 40, 60, 80, 90, 110 days, a lot of these sellers are open to negotiation. Start writing the offers that you think are a fair price, even on the overpriced listing. Like I said, the worst that's going to happen is they're going to say no. Uh, as far as sellers, we're obviously still in a seller's market. I don't want this to, in any way, shape, or form, state we're anywhere near a buyer's market because we're not. We're just not what we were in 2021, and it's trending not even towards a buyer's market, but it's trending towards a balanced market. We're at 2.3 months supply of inventory today in our local market. So again, the smart pricing is absolutely critical for success. The sellers that are stuck in that past market mindset, they're seeing their listings go stale, unfortunately. Now, the good news is median sales prices are still climbing. They're up 6% year over year. But again, if you're overpricing, you're just going to get that silence, right? So, buyers have a fear of overpaying and sellers have a fear of underselling. It's always been that way. But the real risk right now is indecision. In my
I agree. And Ben, I've learned this after, working with you for years, right? If you get the right priced home, it sells quickly and you have the leverage. You as the seller have the leverage to kind of dictate the terms as to how that's going to sell. Because chances are you're in a multiple offer situation where now you have all the power because you can just go pick another offer. Where the mistakes I feel like are happening, even on the buyer side, is are those folks, and from a buyer's perspective, this is great for you, is that when houses are overpriced, you can come in low. They don't have any other offers, so they have to listen to you. And at that point, you're in the driver's seat because they have no other offers. If they want to sell the place, they got to listen to your terms. And you know what? They're going to be far more apt if you're a seller that you're going to have to make some sort of concessions or fixes on the property. If you're a buyer and that house is overpriced, now all of a sudden you have the leverage to say, yeah, I'm going to come in underpriced and I want you to do these 3 or 4 things for me for it because, hey, you've been sitting and it is stale. And giving over that leverage, it's really important to be working with a great real estate agent that understands this perspective, because there's a lot of them honestly that don't. And in doing so and understanding that part of the negotiation as to who has the leverage on each side is so important.
Yeah, absolutely. Absolutely. I mean, it astonishes me that, people just don't write an offer that they think is fair. You look at a house, you're like, I love the house, but it's overpriced. Well, write the offer that you think is fair. Please write the offer that you think is fair. The worst that's going to happen is no. And I'm going to end with this. This is kind of like a closing statement. This is not a crash by any means. It's just a recalibration. Buyers have a little bit more leverage than they did in 2021. Sellers have a little more competition, and the window for strategic moves is wide open. So if you're thinking about making a move, now is the time to do it smart with data and not emotion. Now's the time. Eric, anything you want to say to close it out?
Nothing else, Ben. Hey, you covered it. We finally are getting some warm days here in southern Michigan. So enjoy the outside, guys.
Take care.